In today's video, I'm going to show you a strategy you can start applying right now to understand the directional bias of the market week in, week out. Now, this strategy has an 87% probability of success, and also this is what the hedge funds have been using for years to profit for themselves and that of their clients. Now, in my previous video, I talked about the DR levels for the lower time frame, which was brought to light by the master, and I also show you how to blend it up with ICT concept. In this case, we are going to look at the higher time frame DR zone. Now, this particular video, we want to look at how can we determine the high of the week and the low of the week, so that we can form our bias in knowing if we are to go long or to go short. And also, we are going to blend all of these using ICT concept, so you can make your informed decision in terms of what entries. Okay, we'll be using the ICT model concept to frame our entry setup, but this is simply to give you a long-term picture of where price should be heading to. So without wasting time, let's take a look at it. Now, for us to know the high and low of the week, we need to be able to tell ourselves a story. Okay, the market tells a story, and which you should be able to also use in your analysis. More on this in later videos. Now, you have to wait for Monday candle and Tuesday candle to close. Whichever method you use on Monday and Tuesday, it doesn't matter. When the candle closes, this is what you should do. Mark out the high and the low. Call this the weekly defining zone. Okay, and this is the weekly implied defining zone. This is the body, the highest body. If Monday has the highest body, you mark it out. If Monday have the highest high, you mark it out. If it's Tuesday, you mark that high, and the low as well. Between these 2 months, you mark the lowest week there and also the lowest body. Now, how do you use this? When price closes below this on Wednesday or any other day, we have a close below this line. Now, this confirms to us that for the rest of the week, this will become the high of the week, and we should be looking for what? Bearish setup till the week ends. Okay, and secondly, if price closes above this, then we should be looking for what? Bullish setup to take our price to the upside, and this becomes the low of the week. Now, what we don't want to see are price trade in and closes below. Okay, when this happens, this is simply a sweep of liquidity. These are buy side. Okay, that means buy side liquidity has been taken, so the next liquidity that will be taken will be the sell side. So this also, you can form your bias here by looking to short the market here. Same thing here, we have a wick that clears the lows here and close back in the range. In that case, we look for what? Bullish setup to take the price to the upside. So this is all about it. Now, I'm going to show you on the chart on Euro USD, pounds, and gold. You can backtest this on your own. It has 87% probability that the high and the low of the day will be confirmed. Okay, this is a high probability logic. So how do you take trades here? When you see the break, you simply go down to the lower time frame and start looking for what? ICT setup, concept setup. Okay, do we have a displacement that took out this low? If we have a displacement, therefore we will have some fair value gaps, and those fair value gaps are areas where you'll be looking to sell from, and then confirm your short position to the next zone. Okay, Same thing with this. Do we have a displacement? If we do, then we move to the lower time frame. It could be H1, it could be H4, it could be 15 minutes. Then we'll hunt for our trade to take this to the upside. This is very, very easy. Okay, so now let's quickly take a look at different pairs and why this setup is important. This is pounds USD. You can see that we have Monday, Tuesday, the high and the lows. This is the high and the lows there. On Wednesday, price closed below. This is not cherry picking because this is actually happening right now. Okay, so the lows were taken on by Wednesday candle. Immediate price move in here. This was your trade opportunity. You can trade this Thursday and be profitable, and also Friday you can continue trading this to the downside until the week ends. The previous week before, we have Monday, this is the high, this is the low, and you can see we have a very strong push to the downside closing below. That means this is the high of the week, and in this particular week we have confirmed our high. We don't expect price to move from this and clear this on this day. We do not expect that. It has a low probability of it happening. Okay, if we look at this particular level here, in this case the market was ranging. I will explain more on this as I upload more videos to it, but as you can see, in this particular case, this was the high, this was the low. There was nothing, the market didn't take any side, and this was that sideways trading you've been seeing. On this particular day, this is Monday, this is Tuesday low, price closed above. This was the low of the week, and as you can see from here on, I will make a video to help you understand which direction the Wednesday bar will move, either up or down. Okay, there are techniques you can use in order to predict this move, and then after getting your confirmation, you can see price came down a little bit to retest that level, and you can, this particular day, you can push price up. Now do not use this blindly, okay, because you say, oh, Raba said once there's a close above, then the rest of the week will be buying. No, it should give you a framework to work with your lower time frame buyers. Okay, obviously price will need to come to rebalance and all that using ICT concept. As you can see here now, here we created a fair value gap. So what do you expect when price move up? We expect price to come back down here to fill up that fair value gap, and then from there you can see the rally to the upside. You can see how you blend this concept with ICT to form a bias for the following week without you waiting for this to even give you confirmation. That's why I talk about storytelling, okay, which I will explain more in coming videos. Now in this particular level here, we have it Monday, Tuesday, close above. You can see a push up, creating fair value gap. Price came in here and push higher. Okay, in this case, I won't be surprised if next week we expect price to trade back in here to fill up this gap and before moving lower, because we have left fair value gap behind. Now, am I saying this will move up 100% to this level? No, but I have this also in my mind that in case we have Monday, Tuesday break high by next week, then this will be the target. So I can decide to take the trade to mitigate this fair value gap. Yeah, we have this. These are recent price action. You can see a close above, price came in and then move. This was the low of the day, confirmed this, and then price moved to the upside. Same thing here. We have the high here, we have the low here, price close here, creating a fair value gap. So this is the fair value gap here. Probably if this market open next week again and then we break the Monday and Tuesday, this is where we are heading to. I'm giving you an expo. Okay, this is where price is heading to. Then from there we can look for what price will do. Now you can see I'm not moving between monthly, weekly, daily to determine my buyers. Okay, I know my higher time frame buyers, which is the daily. In this particular week we will be bearish. Okay, and our destination all depends on what next week print as well. I'll be bearish until next week switch. If next week continue giving me bearish method setup, this is where I'll be heading to. Okay, we have here high, low, break below till the week ends. This is the high of the week, where you can see eventually price went up. Okay, and the reason is here. Okay, we have a low here, a kind of strong low, because this market started a reversal. Okay, we have a strong low, then you know that you can start hunting for buy in here. Okay, so when market closes here, your target will be this level, this other block here. You don't expect price to break market structure rules. Okay, but this will give you a tradable opportunity. This is what this method is all about. You will see here high here, low here, broke below. This was the high of the week, and so on. This is the high, this is the low, break above, this is the high of the week. And you can see here it created a fair value gap here. I see the fair value gap. So when price extended, you expect price to come back down, and the confirmation for that week led into this fair value gap. I can see we can't push further. The previous week gave us that. If you are long here and you see a confirmation, you keep holding your trade after taking some partials, and then you watch as price move on. Storytelling, very, very important. I will talk more on storytelling. So let's look at another pair. So this is Euro USD. As you can see, this week we are within the range. Okay, and if you have been trading Euro USD, you understand that market has been ranging, and this is the reason we haven't confirmed any direction. So until next week before we know what to do, if there will be a range expansion or not. Range expansion, I will talk more on that in my later videos. Now in the previous week we have the low here, the high here, price closed above, confirming here as the low of the week. Okay, and you can see as market ended with a down move, because we have a fair value gap here. Because of this fair value gap, you can decide to move this trade to the upside. And when Mondays opened, I was bullish actually. I took some trades and I exited. Okay, right now my focus was on pounds. I traded more of pounds because pounds has given me a clear direction, but this has not. So let's look further. In this case we were ranging, but price eventually broke this, and this was the reason why I took that trade, because this candle was the one that broke this level, creating what? Fair value gaps to trade into. And here we have the high here, the low here. You can see here was a week, price closed inside. But when you see this happening, you go to your lower time frame to confirm this setup for an ICT sweep of liquidity and displacement to take this to the upside. Okay, yeah, we have this break above, low of the week. We have this break below, high of the week. Okay, this has a 87% probability that price will respect those levels. Yeah, this is the low, this is the high, a break above. You should be looking for bullish setup in your lower time frame. Okay, from here you should be looking for bullish setup. Probably you can integrate the DR, IDR levels in your lower time frame to also confirm your buyers. If that tells you bullish, then you have a double confirmation there. Yeah, we have the high, we have the low, close below till the weekend. This was the high of the day, even though we bounced back. And there are reasons for this. Because you are looking for short doesn't mean you keep shorting. Okay, when price gets to a particular level, observe that level. What is the storyline this time around? If we look here, we have here a high, a low, and this low was very significant. It took liquidity and then broke structure to the upside, and also here also. So we don't expect price to take out this, and this was the beginning of that trend. Okay, So you have to combine what I'm showing with you here with everything you know about forex, market structure, top-down analysis, and so on. So let's look at gold. You can try this with any other asset. So this is gold. Yeah, we are still within the range. We haven't gotten a direction yet. As you can see, price week in here and close. This should tell you should look for bearish move, because I know I said when price take liquidity and close inside, you look for short, and you can see your short has been moving. Probably we might be targeting this Monday low. We have here low and high. Price closes below. For that week, this was the high of the week, and price ended here. Okay. This particular week we are ranging. Okay, gold has not given us a nice trade setup. Probably this is the only trade setup I've seen so far. Probably we might be coming down to clear all this liquidity into this fair value gap. You can see how I'm analyzing this just by using this particular technique. In this case, we have high, low, a close above, that is it, low of the week. Yeah, a sweep, bullish, and we were stuck within that range. Yeah, close below, you look for bearish setup, and your bearish setup, you have to look for them in your lower time frame. And what are the lower time frame? You can look at H4, H1, 30 minutes and 15 minutes for your setup. Okay, same thing here. This is Monday, this Tuesday, close above, and so on. So you can backtest this idea. In my next video, I will show you how you can combine this idea with ICT concept in order to have a high probability trade setup. If you like this video, make sure you like, subscribe, share this video so as it can reach as many traders as possible. On that note, I will see you in this video.